So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I am joined today by Vinney Chopra. Vinney is a real estate investor, syndicator, international best-selling author of 2 books, host of 3 podcasts, multifamily investor, and educator, principal, syndicator, dedicated husband of over 40 years, and father of 2 children, Neil and Monica, residing in Danville, California, near San Francisco, for over 40 years. Vinney came to this country with only $7 in his pocket and a dream, and he has now built up a portfolio of over 6,500 units, amounting to over $650 million in the multifamily, senior assisted living, and hospitality arenas. He is passionate about helping others achieve financial freedom and currently focused on giving back to our seniors who have given us so much through development of a senior assisted living and memory cares. Vinney, welcome to the show.
Thank you. Thank you, Jonathan. I'm really thrilled to be here with you, brother.
Absolutely. Can't wait for today's episode. A lot to get to, obviously. But as we do with all of our guests, let's start at the beginning. We kind of alluded here in the beginning. You came with $7. Let's kind of start there. What brought you to the U.S. And then kind of go from there? And
Sure.
how did you got to real estate?
Actually, I'm from New Delhi, India. I grew up there and did my engineering. I'm a mechanical engineer. I always felt like if I want to be in the management side of it, I have to do an MBA, Master's in Business Administration. And I always wanted to come to USA. My uncle came here and he's in the Washington, D.C. area. And that's when I said, you know what, I want to get out there to USA. That's what brought me here to do my MBA at George Washington University. So then the combination of the 2, engineering and, my sales and marketing background, I got so excited about selling, door to door, actually, in how I cut my teeth in the sales and presentations, motivation, public speaking. That got me to put my engineering degree in a box and got into relationship building and investor relations, which is your, show. Yeah.
Awesome. I love that. That's a cool story. What was it about all of that kind of caught your eye and you liked more? You're obviously very personable. So I'm sure that is a factor, but how did that transition kind of happen? We're like, okay, we're putting engineering to the side and focusing on this.
Oh, sure. I really believe that we need to make the lemonade out of lemons. So, when I did my 3 years of, MBA, right? And because I was an engineering background, I had to do some prerequisites, a lot of different courses I had to do. So it took me 2.5 years to do my MBA in this country at George Washington University. But after that, I had to get a job, and engineering I had not done for 2.5, 3 years. I thought I had done sales, door-to-door sales and motivation speaking. Why don't I get a job in that? So that's how I got started in the whole relationship building business. I loved it so much. I never really got back to my engineering and then moved to California. Actually, we've been here over 40 years, 42 to be exact, in the Bay Area. And then I got married in 1980. So right that year, we moved over here. And now we are lovely, living with 2 children, Neil and Monica, and my wife and all. And, real estate also came by surprise to me because my peer group, they were in real estate. And it's like, we say 5 people or 7 people we associate with, they start rubbing on you, so they were telling me about single family home investing and even apartment back then. And I was doing my motivation speaking. I didn't really get too much into it, but we started buying rental homes, in Arizona, in Texas, in Georgia, all over the place. But then I became a broker 2005. 2005. I'm still a broker, active broker, but I don't sell or buy at all. I use that to just have a degree with me or whatever license. But multifamily caught my attention in 2006. I think 2006. That's almost 16 years back. And I said, it really makes sense not to have so many homes all over the states and cities. How about if I could bring all 20 homes under one roof or two roofs? And then we'll have economies of scale and all those things, right? So rest is history. And then I got into syndication world, which is a whole new world. And it's like, where you can harness the monies of other people, like-minded people. You combine their monies, OPM, other people's money, to buy larger and larger and larger commercial assets. So that has really been my focus for the last 14 years, to go from a duplex. We still own the duplex, by the way, Odessa, Texas, $2,400 we get or something. But then 14 units was for $180,000 that I started with. And now we are purchasing like 50 million, 35 million, 17 million, all those kind of things. Yeah. Yeah.
Wow, that's awesome. And such an incredible story. And, pretty common, of course, we talk about all the time, kind of that single family, the economies of scale, how it just makes so much more sense in the commercial realm of things. And of course, putting all 20 under a single property, or even, under a single roof, just makes things a little easier to kind of manage and do all of those things. So 16 years, a lot has changed. Been you got in right before 08. So I'm a little curious what it was like, kind of that 05 to 08, 09, and then, what's been different since.
Good point. Yeah, actually 2005, 6, and 7, I was just learning. And I said, okay, who can teach me the best of the best in multifamily? Because I was thinking about leasing the office buildings and doing this and that. Then I just hunkered down. I said, multifamily seems to be the best place for me to go. And then I got the training from the top person at that time, Mr. Dave Lindahl. I really, thank him for that. He's written 2 books also, Emerging Market and The Multifamily Millionaire. I remember buying them on Amazon. Then I bought his course from eBay. I couldn't afford a big one. And then I, after that, paid a lot of money, like $32,000, I think, for myself. And then another 25 and 30 for my partner. We went to the boot camps and learned the business ground up. And that's when we had personal coaching done by them, and that gave us see, a lot of time people think that, I can take steps, but we have fear. And the fear of the unknown, fear of not knowing how it's going to work out, fear of like, is this the right property to invest in? What should be our business plan? All those things. So by going through a coaching and personal mentoring, it really helped us a lot to take that 14 units. Took us 11 months, by the way, 11 months to buy that 14 unit for $180,000 seller financing, I think. Then we got 109 units same week. We were working on 2 deals simultaneously for 10, 11 months. And then we landed both of them, and rest is history. After that, we got the courage to go to the next deal and the next deal and the next deal. And I've done, I think, 39 syndications so far, about 7,000 units, let's say, give or take. That's only GP, where but my limited partnerships are even way more. I'll be over 15,000 units, I think, or something.
Wow. That's incredible. That's awesome. I love that so much. You made an incredible point, which of course is learning from, hiring coaches and mentors and different things like that.
Yeah.
Talk to death about it, but it's just such a huge key, right? You're really not going to find anyone, especially in this field, really in any field, that hasn't had a mentor or coach in some sense, you know,
True.
pointing them in the right direction.
Because we want to do it on our own, and we feel that we can do it, we can grasp all the knowledge from the internet and all, which we can, but systematically putting it together and giving the tools, I think that's the biggest thing. If I were to design the tools that I was given, I wouldn't be where I would have grown. And now in my academy, I do the same. I provide everything that I've developed over 15 years to my students, so that way it's easier for them to climb the mountain. Yeah.
I love that. And so important. One thing I know is people who have done it on their own, because you can do it, like you mentioned,
Yep.
but it's,
Yep.
I've pretty much unanimously heard it's about a 5 to 10 year
Yeah.
curve
It takes.
that
And
it
then,
takes.
yeah. And then you are also questioning yourself. You're saying, did I buy the right stuff? Should I go into it? Especially when we're buying millions of dollars, of getting on the loan, recourse loans and non-recourse, and making sure our money of the investors is safe, because we have fiduciary responsibility for the well-being of the preservation of the capital and making the profit on the capital in syndication world. It just makes sense to kind of follow the path and get somebody who could take them from step A to B to C. Yeah.
Absolutely. And there's no secrets in this game. Nobody's,
Mm.
reinventing the wheel here. So it's okay to follow exactly what someone's done.
Totally. And, I really believe in that, Jonathan, that every single syndicator or investor has their own trees and garden, I call it, because with their clientele circle, with their family friend circle, with their acquaintances and their relatives and all, so everybody's got their own tree and branches and leaves. So it's nothing against to share all the knowledge between each other, so that we can have the best of the best PowerPoints and best of the best pitches and all that, and have the tools available so that people can grow and develop and be better than the mentors.
Absolutely. That must be a pretty rewarding feeling, to take a student and them exceed even what you've accomplished.
I do. I say to them, I said, hey, I'm just a small, insignificant guy. I want you to be bigger than me, And many of my students are just doing like in millions, 50 million, 100 million. What? I mean, in just short period of time. I think it's not me at all. I just give them the roadmap and teach what I was taught, but it's their action taking, their organization skills, their delegation, they're taking and building their brand. They're, talking to the investors very passionately and delivering on it, that mushrooms your business.
Yep.
Yeah.
It's so true. You made a great point there. Action. It's all about taking action, right?
Yeah.
You can read and watch and learn till you're blue in the face, but until you take action, that's really where all that comes from.
Very true. And a lot of people are in W-2 job. I mean, we are shackled. I was too. I just retired from my position in 2015.
Wow.
What? I started 2005, 10 years. I did every night or every other night, I think we would meet as team for 2 hours and learn and do and grow. And, we were in the down dumps and we needed some accountability, from the coach to bring us all out. So those things are very genuine. I mean, when you are not really crushing it, and now the market is so high, also seller's market, there are so many deals are far in between, and all that. So you just need that accountability partner, right? That person who can really complement your skills and things like that. The other good part is, moving the needle. You got to have the goal setting, that so much time will be devoted to talking to investors, so much time in building relationship with the brokers, or looking through different campaigns to get those nice deals, off market deals if we can get, and so on. Yeah.
Absolutely. Couldn't agree more. What are some of your keys to creating and building a successful partnership?
I definitely say right now that please don't join at the hip right away. I did a mistake. I formed a company which I have a set percentage, my partners, two other was set percentage, but then you don't know who's going to come out how, right? How much time they're going to put and all, how the whole mechanics are going to work. So it's better to make your LLC, let your partner make their own LLC, and you're going together in the first deal as two separate people coming in, and then usually 70-30 split, as you know. So 70, the investors are brought by both of the partners. You cannot just have one take care of all the things, and then you come as two companies into the 30%. I teach that way, but then see how the partnership goes, because many partnerships don't work out. They don't. They are friction, there are ups and downs, everything. So it's better to really try, one or two deals. And maybe who knows, like when I started my new company, Monil Investment Group, November 19th, 2014. So I'm only 7 years young, in my new company. But when we started, my wife and I started, we just became so exponential growth, right? Because you didn't have to really get everything okay from the other partners, so you fly like an eagle, I say. To join maybe one or two times and then see and get even some. The only thing you need is net worth. That's all it is, because the loan has to be lower amount than your total net worth. So one can find net worth within their circle, and maybe that key principal would not like to really be in the syndication world longer, but you can get that going in the early start, but then you can take off, because as every asset comes under you, your experience grows and your net worth grows, and then you don't need anybody. And I think in
Absolutely.
the last 30, how many syndications I've done, 39, I think I might have gotten principal who helped me in the early stage, one person only, I think. And then maybe joint partnerships I'm doing lately, 50-50. So those are, of course, $52 million deals and so on.
Awesome. I love that. You made a really great point about, key principal, key partners.
Yeah.
If they don't want to be involved, what are some things that we can do to still compensate them?
Good point. I mean, if you have some partners who can really organize, like systematically, they are very mathematically sound, then underwriting is a huge part of the game. As you know, we want to find the right product, do right assumptions conservatively, and then due diligence is another part of the big thing. Asset management is another part of the business, and then money raising. I always say money raising should be everybody's job, because you can't really pay anybody, outside the company, unless they are doing fund of a fund structure and things like that, where you could compensate them for raising money. Otherwise, SEC ruling is very strict in who raises the money. So all the people in the team, they could really, take care of certain parts of the business. Many times I say in the early start, I was doing everything, right? When I started my new company, I was everything. I was doing underwriting, I was talking to brokers, I was talking to investors, all that. But it's good to have one person. Don't go for too many partners, because then each person gets a sliver. I call it sliver of the 30%. And it's not really that legacy building then, unless you're planning to do, lots of millions of dollars of purchases and billion or so, whatever. But the key thing is to just have two solid partners who can complement each other. And then you could take it to the next level. Like in my case now, my daughter and I are on the top, and my wife also was very much involved before. Now she's taken a back step, but then, we are able to carry the load on the top. into all our acquisitions, and she's the asset management and operations VP of operation, will be the next president of the companies and all. Yeah.
Wow, that's awesome. That must feel so great to have that
Yeah, it is.
work alongside of her.
Mhm.
What did your son decide to do?
That's a very good point. Our son is an IT guy. He went to Berkeley, did electrical engineering, computer science. So he's been in the IT industry, nothing to do with real estate.
Wow. Okay. Awesome.
Even though his name is in our company, Monica and Neil together is Monil, which is our brand. So he'll inherit half of it, or maybe 40%, because Monica is building the wealth. So maybe, they're very good kids, and I know they'll have a very good time,
Awesome. I love it. Well, sounds like it'll be in good hands. One thing I want to touch on, I really appreciate all of this insight. Honestly, this has been incredible. A lot of entrepreneurs listen. So, and a lot of these things, actually, most of these apply outside of real estate as well. Just any business partnership in general, those are some really important keys.
Totally. I would say, Jonathan, it's a business, like you just said. It's the entrepreneurship mind, and you are making decisions on a daily basis. What's best for the investors? You got to always look for who brought you to the dance, I call it, right? My investors who gave me 50,000, then 100, and now our top investors have almost 5 million with me.
Wow.
One family, 4-5 million. Second, I think, is 4 million, 4.5, 3.75. So by giving them the returns, they open their wallet bigger and bigger and bigger. So I hope everybody looks at every investor as not as one investor, but 20 times. What will be our attitude? What will be our demeanor when we look at everybody we are talking to, giving presentation, asking questions, or digging into it? Because once they like you, they will open up to their relatives, their friends, their colleagues at work, and everybody. So not just 100,000 you will get from that investor, but maybe millions. So having that attitude of abundance and that attitude of gratitude, and making sure that you're keeping every investor happy, that has been the backbone of my business. Our business, we have 430 investors only. That's all.
Wow.
But we are just coming back and again and again and again. And we have sold 26 already. What? Out of 39 syndications, we have closed, we have sold double, triple monies, and now we are selling 2 more assets right now. One in Austin. Oh my gosh, that's my biggest home run ever.
I can only imagine.
I know. I bought for 34,750,000 near to the domain, Jonathan, and it's selling for 63 million. 34,750,000 to 63 million in 1.5 years, brother.
Wow.
I can't believe it.
That's like a perfect 2x right across the board.
Yeah. But
it's incredible.
Is we want to make sure our investors are gold. I say that always. Our residents are gold, not tenants. They are residents in Monil Premier Communities. That's how we promote and everything, and make the best of the best communities. But the other part are we are vertically integrated. We always were. We had 153 full-time people in our team, staff, and that was regional managers, asset managers, community managers, of course, leasing, HVAC certified, and all of them. So, their livelihood was dependent on our thing. So their gold, our front, people on each of our communities were gold, are gold and were gold. And then comes after that, the vendors, because we are giving such great livelihood to the vendors. So it's a ripple effect.
Yep.
I mean, what we really run this business has so much ripple effect all the way across. So it's a business, it's an entrepreneurship, it's the mindset of gratitude and making sure we have the right corporate culture, making sure everybody's motivated, we are giving them bonuses and 401ks and benefits and medical and dental and all, just to make sure that we are running the business very professionally.
Wow. I love that. That's incredible. So much great insight. It's almost like investor relations is the key.
Yeah.
Hence the name of the podcast. Hint, hint, hint.
It is. I'm telling you, you have the best, podcast name.
Thank you.
Unless we are able to get amazing investors who tell other people and other people and other people and other people, that's what it is. Fusion theory in engineering, in science, physics, we call fusion theory. So what if we have one investor who's so happy, they want to tell other people. And that's how our investor base has grown, from mom and dad to brothers, sisters of them coming, their children coming. So they say, Vinney, meet with so-and-so, so-and-so, they're referring. And then at work, they're saying, oh my gosh, Vinney's made this and that, and they're coming in. Then now with the podcast and my books and all that, I'm getting calls. People say, Vinney, you're so genuine. I want to put $1 million with you. I said, hold on. We don't even know each other yet, And I said, let's hold on. Let's wait. So do Zoom meeting and get to know them and everything. So all those things will come, but you got to be transparent. You got to be honest with full integrity, and you make sure that your investors are king. And that's why I say it's the whole like a field, right, of investors, but you cannot burn them. So you are the fire engine. If they need you for anything, if something is K1 or other things, or any kind of thing, you should stop everything to cater to their needs. And in our company, nobody knows our investors, by the way. Wow. Only my daughter, myself, my wife, and our, VP of accounting, right? VP of finance, and she's been with me 15 years now, 14, 15 years. So only those people, and our CPAs, of course, which is confidentiality, they are the only ones know. And we don't bombard them with nothing. Our investors are private people, and, they like to be very, private. But we only send the things out to them. I've never done a webinar. Can you believe it? To raise money.
Wow.
Never done a webinar.
That's incredible.
At all. Publicly, I've never done a webinar to raise money, but it's been always the investor relations quarterly meetings. I felt like, because everybody's going to watch it. So we've been recording them, and as many people come, they ask me questions live, everything. But I know that those who couldn't make it to the investors meeting, they're going to watch the whole video. So I decided 9 years back, I think, that I'm going to put my future, where I'm going, what markets what new deals I'm looking into, I'll put it at the end of quarterly meetings.
Nice.
So I always kept those. So my investors actually got the webinar in a way, but it was at the end of the quarterly meeting.
Wow. That's incredible. That's awesome. So for those that are new, real quick, basically what you do is, once you find a deal, you've identified it, it's under contract.
Yeah.
What you'll do is you'll do a webinar, usually, send out an invitation on Monday to your email list for a webinar on like Wednesday or Thursday, get everyone to register, and then you'll basically present the deal to everyone. And then from there, people will decide if they want to invest in it, kind of so on and so forth. What he's saying is he's never had to do that because his deals get subscribed to so quickly, which is a testament to him and his investor relations. And I know a few other people who do this as well. And it's, you just have people chomping at the bit, just cannot wait for you to have a deal. And all you have to say is, hey, we've got a deal, and they're wiring money.
They are able to do the commitment we do through Google Sheet and Google Form, which is amazing. So it's all time stamped. As soon as they get the link, they click on it. I know some of the investors will be angry because they say, Vinney, you sent it in the morning and we were on the driveway or we were on the freeway. And by the time we reached, home or office, you were sold out.
Oh, wow.
5 hours or 6 hours. Then I started sending on Saturdays. I said, this way they'll have the weekend. So now we do it through Google Form. And when they fill out the form, they put everything in it, everything. What entity they're going to come with, how much, everything. And then it goes into Google Sheet, which is connected. So we have a whole rundown of the stamping, what time did they commit. So we put a very methodical approach to it, and I collect 99% of the money. What?
Wow.
I
That's
just
incredible.
have made it. I train my investors that way, that, it's first come, first serve, which I always, even if they have a lot of money with me, I never try to go put them in front of other people.
Always be
because
fair.
they'll be in the next deal then, and they like that because I'm very true to my commitment and what I say. And then it's not only the commitment, then the money has to be, paperwork has to be filled out, DocuSign within, I think we only give 2 days or something. And then the money has to be wired in the bank for them to get the spot.
Right.
So,
and then do you use a portal?
We use the portal, Appfolio. We use
Nice.
Appfolio portal, and then we do, all that so that it's able to bring all the money, and then we send them confirmation, we got the money, and this is your transaction, the whole thing, so that they have a full record of it and everything.
Wow.
And the good part is, another thing I'd love to share with your audience is, I came up with the brainchild, at least at that time, 9 years back, because I thought investors' money, to get it faster into the LLC's account, it's not making any money at all for them in the regular savings account or regular checking account and all that. So I started giving them 2% interest on their money from the day they wired the funds up to the day of closing.
Wow.
So only like for a month or month and a half or 10 days or whatever, but I never had to have any sleepless night whatsoever, because as soon as they, filled out the paperwork, they were starting to wire right away, because then they were getting this extra interest, which otherwise the money was not getting any money, unless it is like CDs, at that time. And now also CDs pay about maybe less than 2% maybe, but I would give them from the day of the wire, it's coming into the LLC, and then up to the day of closing. And most of my deals have been momentum plays. What that means is, from day one, they start making money. Unless my development deals like in assisted living like that, that's dirt the first year. So no cash flow, but after that it comes. But that has really helped a lot of, and then I could show that all that money in the LLC account to the lender, right? Because they like to see also how much,
Absolutely.
So that's a
Wow.
small thing. If anybody wants to, do that, it's a great way to put that urgency. Urgency is the name of the game,
Absolutely.
Every communication, you got to say it's first come, first serve, and highlight it and do everything, all that. Yeah.
So do you move it into a debt fund, or do you just pay that, you just calculate that in-house?
Good point. I just pay from my side, because I make good acquisition fee. We all do, right?
Right.
Loan guaranteeing fee and the acquisition fee. I split the two now. By the way, that's another thing for the money raisers I would love to share. Usually we say acquisition due diligence fee, but for last 6 years, I think I changed it. I said, what? I am on the loan, on a recourse loan or non-recourse Freddie loans. So loan guaranteeing fee, I call it now, and acquisition due diligence fee is separate. Aha. So you could split 3% into 1.5, 1.5, or you could say 2% on this case, acquisition fee and, acquiring the product and everything. And then 1% could be the loan guaranteeing if you are the loan guarantee, or if you're doing 2% total, still split it in two if you want to. It's more palatable. And then investors can also see that there is so much involved
Yep.
finding the deal and negotiating the deal and getting the loans. You know how it is. I mean, it's a pretty big job.
Absolutely. Absolutely. And one thing to pay attention to for those of you that are on the passive side, you want your operators to be paying themselves. If you're seeing operators who are not paying themselves fees or their fees are really small, that's also a red flag.
I'm so glad you're saying that. I remember Gene Trowbridge, father of syndication. He's got great
I've
book.
had him on the show before. I love Gene.
Yeah, amazing person. And Kim Lisa Taylor, they are my both the top syndication attorneys who did my 26 syndication packets.
Wow.
26 different ones, So I learned a lot from them. And that's what they said. They said, Vinney, don't undermine what you're doing. Don't undermine that you're putting so much effort and learning and everything. Then you're working 6 months to find this one nugget of a deal. And now you're getting on the loan. Then you have to manage it for 5 years. I mean, all those things, required a lot of time commitment and monies and all. So acquisition fee, due diligence fee and loan, guaranteeing fee. And then of course, disposition fee, refinancing fee, asset management fee, all those come with it, yeah. So
Absolutely.
these are not something that the investors take out of their money. See, that's
Right.
the other thing. You got to tell the investors your 100,000 are intact. You're not paying for my fees at all. It's the equity, it's the value add, it's the valuation. Equity growth is going to pay for the fees. So it's not coming from your pocket. These numbers that I'm sharing with you, the ROI, the ARR, the IRR, cash on cash, they are already keeping in account the fees taken out. So what numbers you are getting are the real numbers that you can project, Yeah.
Absolutely. Great point there. Awesome. I love that. For those that don't know, disposition fee goes on the backside.
Yeah.
And it's basically a fee, like a job well done fee, successful strategy exit fee. So
Totally.
another way, obviously operators aren't always getting paid along the way because investors get paid first. So just another fee for operators to pay themselves on the back end for a successful deal, really.
Totally. One more thing I wanted to clarify to all the money raisers is, as you are talking to investors, please tell them their 100,000 is actually buying an asset 4 times that, because the bank is coming as a leverage. Many times we forget that. So we should tell them in 75, 25%, loan, LTV, 75% LTV, 100,000 that the investor puts in, the bank is putting 300,000 as a loan. So they are controlling an asset worth 400,000, which is very different than stock market. If I want to buy Google or Amazon today, I have to pay 100% of the money.
Yep.
Otherwise, if I'm using margin, we call it, right?
Right.
Not options, but margin. But that's still, you cannot get. So in the real estate, that's the one asset class where you can diversify very successfully and get a leverage work in your favor. And not only that, the best thing is that each investor is on the title and everything. They own piece of the commercial building or whatever, hotel or whatever it is, or multifamily. But the key thing is the bank does not ask for the gain on that 300,000 portion. They just say, pay the balance. That's due, interest in the principal, and all the gain is yours. Oh my God.
True.
I mean, it's just amazing. And it's good to kind of simplify and share that with the investors that can make logical sense to them. and even bring more money in your fold then,
Absolutely.
Educating the investor through some solid, totally great PowerPoints, slides with the cost segregation, the taxation, the 1031, the leverage, like I just mentioned, all those things can go a long way for them to warm up to us and say, yeah, I want to invest with you.
Absolutely. Wow. Such incredible insight. Thank you so much for sharing that. I wish we could keep going. We are coming up on our time here.
Yes.
This has been amazing, Vinney. Seriously, thank you. But I do have 5 questions
Sure.
that I ask all of my guests. It's the final 5. First question, what's the best advice you've gotten from a mentor?
The best advice I got from the mentor, they said, Vinney, think big. Think big. And it's one transaction, it's one loan, it's one property, but more zeros to the right.
So true. Guys, there's really not a difference in the process behind 10 doors and 300 doors, just more zeros and a few more people. That's about it. I know doesn't really make sense if you're not in it, but it's so true.
Yeah.
And so don't be afraid to go after the 300 doors is basically what he's getting at, just because, so what is it about your career that makes you feel like you're fulfilling your why?
I really, just like I kind of boxed my engineering, back, I never wanted to be behind the desk kind of guy. And I think I've given 15,000 speeches or things like that, motivational speeches. I just enjoy, building relationship with everybody I come in touch with. So it's been a very rewarding, career, and especially it's taken off so nicely with grace of God in the last, 10, 12 years that we enjoying it, yeah.
Awesome. I love that so much. What's your favorite non-real estate or investment related book?
Oh, book, you think? Oh my gosh, I would say without doubt, Power of Now by Eckhart Tolle.
Oh, such an incredible book.
Such an incredible book, And then another book, if I may say, is Miracle Morning by Hal Elrod. Oh my gosh. Those 2 books are amazing. Yeah.
I've not read Miracle Morning, but heard great things. But Power of Now, it's not a long book, but it's a powerful book. So we'll take you some time to get through, especially if you're doing it right. I journaled through mine, which is, you don't have to do it, but just a very, very fantastic book. Really great perspective. If you could have any superpower, what would it be?
Oh my gosh, my superpower, I take the poverty off of the world, really.
Wow.
I think that will be my superpower. I really have very compassionate, with people. We are all same human beings, Some have more means, some have less. And because of where we were, born and things in different parts of the world. So if you can take the hunger out and poverty out, that'll be amazing.
Wow. I love that. That's so awesome. What's the best way for people to get a hold of you and learn more?
Oh my gosh, I'm Vinney Chopra, V as in Victor, INNEY CHOPRA, Chopra. I'm on Amazon, 2 top sellers. I'm on Instagram, Twitter, my YouTube channel. Please enjoy that. And then also on Facebook also, yeah.
Awesome. Vinney, your insight has been absolutely incredible. Thank you so much for sharing with us.
Thank you, Jonathan. Thank you for inviting me. Such a pleasure. Have a wonderful day. Everybody listening to us, please subscribe to Jonathan and also my podcast, which is Syndication Made Easy and Mr. Smiles. Yeah.
You have 3. Plug them real quick.
And
so
then my senior living, innovative senior living investing show, which we do intermittently. Now I'm getting more and more powerful into it. So we'll be doing more shows on that also. Yeah.
There you go. Choose your asset class. And Vinney has a podcast for it. I love it.
And
Thank
then
you so
Vinney
much.
and Bo show on Friday, which is live show every Friday, 9:30 Pacific AM, 9:30 AM Pacific. I come live. It's in 7, 8 channels through Restream. And then we make podcast out of that too. My co-partner, Bo Eckstein, and I do that together. Yeah.
Wow. I love it. So much content. Plenty to learn from. Incredible insight. So thank you again so much.
No, thank you, Jonathan. Thank you.
Absolutely.
Brother.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.